The real price of gold and silver, no one knows what the hell it is. That's the truth. So yeah, I think gold and silver will go higher than anyone thinks possible. 100%. And what we see in Shanghai is just the very beginning of it. I think before it's all said and done, you'll see them jack prices up more and more and more and more in the last ditch attempt to siphon away anything from this fraudulent Western system.
Gold has had two major peaks in the past 50 years, in 1979 and 2011. But 2024 just joined the club after gold recently broke through a trend line connecting the two previous tops 32 years apart. The central question is whether that milestone is bearish or bullish. Andy Schectman, CEO and president of Miles Franklin, has emphasized that the true value of gold and silver remains uncertain due to the significant distortions in asset prices over recent years. These distortions, according to Schectman, have been largely driven by prolonged periods of low interest rates and the influx of easy money. He argues that these conditions have led to the suppression of gold and silver prices, preventing these precious metals from reflecting their genuine market value. The word of Jerome Powell, the president of the U.S. Federal Reserve, is worth gold, literally. The price of the precious metal was once again on fire in anticipation of the conference in Jackson Hole, Wyoming, that began on Thursday, August 22nd. On August 19th, gold surged past the symbolic $2,500 mark, setting a historic record that was short-lived. The next day, it closed at $2,514 after briefly exceeding $2,530 during the session. However, the excitement cooled somewhat afterward. Yet on Friday, August 23rd, the day of Powell's speech, gold climbed back above $2,500 per ounce. This marks a more than 20% increase compared to its price at the start of January. Silver gained above $30 as the market anticipates a rate cut in September. In August alone, gold prices have jumped by 6%, while silver has experienced an impressive 8% rise, highlighting robust demand for precious metals. With the Federal Reserve now pivoting toward lower interest rates, a weaker dollar, and the potential for reignited inflation, Schectman believes that public interest in gold and silver could surge, driving prices even higher. Finally, he asserts that much of what we see in the metals market today is illusory, a product of a system that has risen in opposition to gold and silver, which have been held back from reaching their full potential. As we dive into the video, remember to subscribe and tap the bell icon so you never miss an update. We value your thoughts, so drop a comment below and give us a thumbs up if you enjoyed the content.
The real price of gold and silver, no one knows what the hell it is. That's the truth, because of all of the distortions in asset prices over the last half a dozen years due to low interest rates and easy money. The one things that were stepped on and weren't allowed to over express themselves were gold and silver. And just based by the acquisition and by the backing of, when you look at the BIS and the IMF plans for cryptocurrencies or central bank digital currencies, it all seem to be pegged to gold to some degree, whether it be the unit or the report that came out of the IMF saying gold is a barbarous relic, or an international reserve currency, a barbarous relic no more, question mark, or the Kristalina Georgieva, the head of the IMF, saying, CBDCs is not pegged to something would be fiat. They're all talking about gold, and I think the price is way distorted. And these countries have been using the suppression of the West to accumulate. And when they all have it, that suppression will end. It will end badly. You can only manipulate a market by pushing the direction it's going, at least for an extended period of time. And these countries are now, like I've been saying, motivated, coordinated, sophisticated, and wealthy, and they are using every chance they get to drain the system, using these Western prices, which are artificial. They are not real. And even though they're higher in Shanghai to entice arbitrage, they're not real. They're not real, even remotely real. And they'll be much higher based upon the amount of currency creation and based upon the projects that are coming and what it means to, I think, install confidence in a system that's dying for some confidence, dying for something real, because we've squandered that, ad nauseum. So yeah, I think gold and silver will go higher than anyone thinks possible. 100%. And what we see in Shanghai is just the very beginning of it. I think before it's all said and done, you'll see them jack prices up more and more and more and more in the last ditch attempt to siphon away anything from this fraudulent Western system. Over the last 3-4 years, this is a situation where silver and gold are far more valuable than the currencies that purchase it. Much of the world understands this. We don't. And to try and play games and try and bottom feed and get lucky, it's not something that I think will go over very well, especially with such a small participation of the U.S. public. If gold and silver are doing what they have been doing, let's forget about silver because it's been held down. But look at gold, and silver will surpass gold in percentage terms, I believe, before it's all said and done. But if gold is doing what it's doing with positive real yield, forget about the nonsense out of the BLS and all that stuff. But a positive real yield, a strong dollar, and waning participation by the West, what happens when that changes? What happens now that we're pivoting and we're going to lower rates and we're going to weaken the dollar and we're going to reignite inflation? And does the public wake up to this and start buying? It's rocket fuel. But much of what we see in the metals market is illusionary, unfortunately, because it's the antithesis of the system that has been allowed to rise unabated versus gold and silver, which have been stepped on. And although they continue to move, I would argue stepped on to the point where they have not been allowed to fully express themselves to their real potential.
The gold-silver ratio, which shows the number of ounces of silver needed to equal the value of 1 ounce of gold, stood at 83.85 on Tuesday, down from 84.21 on Monday. The gold-silver ratio is significant because it is a tool for comparing the relative values of these two precious metals over time. Historically, the gold-to-silver ratio of 85-1 is considered an anomaly, as the natural ratio is typically much lower, indicating that silver is significantly undervalued. Andy Schectman views silver as the investment of a generation, emphasizing its exceptional potential. He suggests that trading gold for silver at an 85-1 ratio could be advantageous, with plans to switch back when the ratio drops to the 40s, which aligns more closely with its historical average. Even at a 42-1 ratio, silver is still substantially undervalued compared to gold. Now, let's redirect our attention to a video.
I've been buying gold too, because in the end, I think gold is the place to be. Here again, we have to time this properly. Silver is by far the investment of a generation. And I don't say that lightly. There's nothing like it. And that chart should really hammer that home. These banks that are shorting this metal, not only are they sophisticated, they're informed and probably being told to do it by the West, the military industrial complex, or whoever is stupid enough to tell them to short silver to that degree, naked short in what amounts to a drive to accumulate by the biggest powers in the world. It's a very dangerous game. 85-1 is an anomaly historically, geologically. It's 11 times higher than it's coming out of the ground at. It's contrived. It's enough to make China go all around the world or all through Latin America and buy unrefined silver concentrate and doré. They are beating us at our own game. Look at the drawdown in the LBMA vaults, the lowest they've had since they started keeping records. So yeah, I mean, in a perfect world, you buy silver or trade gold to silver at 85-1, and when it gets anywhere into the 40s, you switch back. And even at 42-1, which is just above its 200-year average, you're still 6-7 times higher than it's coming out of the ground at. I mean, it's one of these deals where the potential is extraordinary due to the suppression. And the old saying, the market can stay irrational longer than you can stay solvent. And that's been the case for a while. But in 2010, when I noticed this and called Bix Weir and said, Bix, we got to do a podcast, got to tell everyone to sell their gold right now. It was 85-1. I said, Bix, this is the second time I'm going back as far as I can see, all the way back in charts. And it's the second time it's ever happened. And so in theory, in 2010, you trade me 1 ounce of gold and get back 85 ounces of silver, of course, depending upon the form. 7 months later, knowing that 42 to 45-1 is the 200-year price average, not the geologic, but the price. Man's ratio, as Bill Holter calls it, not God's ratio, which is geologic. And within 7 months, you had 37-1. You had $50 silver, 1915 gold. In 7 months, you would have only needed 37 ounces to get back that 1 ounce of gold. You would have doubled plus what you started with, and it worked. It was orderly, it was smooth, it was clean. But would it be this time? What are the variables? What is Murphy lurking around the corner, just to revenge, and is gold all of a sudden disappear? Or I don't know. So in theory, yes, it is the trade of my career. I mean, I could see that being the trade. And I've had some really good ones, playing the Swiss franc when they decided to not join the European Union. That was a good one. And there have been some other really good ones, but every one of the biggest trades I've ever done in my career center around exploitation, first identification of price anomalies. This is a price anomaly. And so, yeah, from a standpoint of actual numbers, yeah, it makes great sense. Big Square would scream at you, yes, do it. So I just like people to understand that nothing is a guarantee. But in terms of a calculated speculation, it's the best I've seen in 34, almost 35 years in finance. I've never seen something that silver offers something called asymmetrical risk reward, the best I've ever seen, which means it has, in my mind, the lowest downside risk and the best upside potential of anything I've ever seen in an asset that is depleting in nature and massively being accumulated by most of the world in quantities that we've never seen before. So, problem here is that the price setting mechanism, the exchanges of the West mask and blur and confuse reality. And so it's hard for people to know just how good of a deal this really is, but it truly is a special, I think, a special opportunity if pulled off right.
Silver prices peaked at approximately $49.45 per troy ounce in January 1980 and fell to a low of around $3.56 per troy ounce in February 1993. Similar gold peaks were observed in 1979 and 2011 and are now occurring in 2024. In both previous instances, gold also declined from its all-time highs. The question is whether the situation in 2024 could result in a different outcome. Are the current economic, geopolitical, or market conditions indicating a unique set of circumstances that could impact silver and gold prices differently this time around? Join the conversation. Share your thoughts in the comments, give us a thumbs up if you found value in this video, and subscribe to stay engaged with our community.